Hey everyone, how you doing today? Topic number 3 is one I've been wanting to do with Jonathan for quite a while. He's going to be the multifamily person. I'm going to be the single family person. And we just want to have a discussion about pros and cons of either asset class. Again, there's lots of people out there with opinions like this is the only way to go. My famous example are gold bugs. If you ever find a gold bug, you ask them when's the best time to buy a gold bug. It's today. And that's never I mean, it can't always be the right answer. So, Jonathan, we're going to talk about multifamily and single family and kind of the pros and cons of each. What do you think?
Yeah, sounds great. Let's do it.
All right. So one of the things I'll just throw out there first that I like about single family homes is obviously the debt structure. Again, we're talking residential loans, so fourplexes and below if you really want to get into it. But the idea that you truly can get 30-year fixed rate money, and of course, in the debt, they can't call the loan, right? If the asset falls by 50%, they can't call it. It's a residential loan that's not in the loan documents traditionally, which is something I truly appreciate about residential properties.
So on the multifamily side, you are unlikely to get more than 12 years of debt. There are some certain HUD programs you get actually up to 40, which are great, but those have a lot of strings attached to them, sort of in terms of affordability and stuff like that. It's a program that's meant to help build affordable housing. But that aside, you're going to get at the most 12 years, and that depends on if you're getting government-backed debts, the Fannie and the Freddie stuff. You can get sometimes up to 12 years. If you're going to a local bank, you're unlikely to get more than 5, right? And for the government-backed stuff, you can get 30-year amortization. So your amortization is as good as a single-family home.
Oh, that's good.
But in 10 years, you have a balloon and you have to refinance. So that is that's like an issue. And then if you have got it's a bad time in the economy when you have to refinance, like all those things can sort of affect your ability to refi your property. The other thing that is different about multifamily, which makes it a little more difficult than single family, is that you must have a net worth equivalent to the size of the loan in order to get the debt, and you have to have 10% of that liquid. So let's kind of explore what that means. Let's say you have $1 million of cash sitting in the bank, and that's basically your only asset, right? Now, if you were in single family world, you could say, hey, I can finance a $5 million house with my $1 million down payment, right? And if my income supports the payment, the bank will say, sure.
Yep.
In multifamily land, the bank will say, too bad for you. You don't have another $4 million of net worth for us to potentially take if you default on your loan. And now you can sort of finagle this by say you could go and buy 4 $1 million properties with or 5 with 20% down on each, and you can keep on counting that $1 million over and over and over again as the net worth. That you could do, so you wind up at the end of the day with 5 assets worth $5 million, but in total, but you couldn't do it all at one shot. So that's another kind of issue that makes multifamily different, let's say.
Yeah. Another one I like about residential property for the average Joe is the exit, because we both know being a landlord investor is not for everyone. Sometimes it sounds prettier or sexier than it really is. You get down in the trenches. I mean, the last year has been horrific for mom and pop investors. A lot of them have rent strikes or just, it's been difficult, right? So if you're in residential, again, single to fours, the exit's typically easier because you have multiple kind of end buyers, especially if you're in single family homes. Obviously, you kind of sell to other investors, but again, the largest proponent of residential buyers is owner-occupied at somewhere between 65 and 68%. So that's one of the exits I like. That's one of the things I like people to start with, because again, real estate investing sounds great. Money's involved, ego's involved, helping. I mean, lots of reasons to do it, either multifamily or single family, but it ain't for everyone. And, sometimes you figure that out 12, 18, 2 months, 2 years in, and you're like, I really got to get rid of this thing. And it's easier with residential, in my opinion, but maybe I'm wrong.
Well, it really depends. But there are some other advantages that multifamily has in that, opposed to single family in this respect, which is one of the big ones is that it is far easier to find high quality third-party management.
Hmm.
So for multifamily properties. So you
Absolutely.
don't have to do it yourself and you don't have the headache of operating yourself, right? Whereas single family for small deals, it can be very, very difficult to find good managers if you don't want to be doing it yourself. So
Absolutely.
that's one thing. The other big advantage, or another big advantage of multifamily, is that your vacancy risk is much lower.
Mm-hmm.
If you have a single family house and you have one tenant, and when they move out, you either have 100% vacancy or you have 0%, right?
Yeah, there's no middle ground. Yeah.
There's no middle ground. And if you've got 4 units, it's the same thing. You have one tenant move out, you've got now 25% vacancy, right? If you have 10 units, you can just do the math. If you have
Mm-hmm.
100 units,
You're right.
each tenant is less and less meaningful to you, right? So you can be stricter with your, who you rent to. You just don't have to stress out about individual, tenants to the extent that you do with a smaller property. So that's another advantage. And in
Oh,
terms of the
absolutely. Yeah.
exit, I mean, really these days it is not difficult at all to exit from multifamily. It used to be that was the idea. It was harder to sell these properties, but between the institutional interest in multifamily, the syndicators that are out there now, the retail investors that want to invest passively in these, it's become a very liquid asset to an extent that it wasn't, and it's become
Mm.
also more of a national market. So, like in your, 1 to 4, you're only going to have local buyers.
True.
Whereas if you've got 100 units of multifamily, you're going to have people all over the country looking at that asset.
Mm-hmm.
So so I think the exit is not as difficult as it once was. But the financing is going to be the problem, and the financing is going to be harder to arrange. That does limit the number of buyers. But right now, even with a more limited number of buyers, there's still plenty of buyers out there.
Yeah. The other thing I think that's interesting when I look at single family and multifamily is I think multifamily really does give you the opportunity to take whatever, like people that sign up for multifamily launchpad, for example, that skill that you teach them really is deployable for the most part in every part of the country, right? Because the same mechanics that you go through to evaluate 100 units in North Carolina is, the same thing in other areas. You may have tax differences and insurance, that kind of stuff. It's like at the edges. But when I think about my experience with single family, right? If you're going to go deep in residential, that DNA, that kind of mechanism plays elsewhere, but you got to start from scratch
Right.
because single family homes in, again, pick any city. Austin is very different than Fresno, and Fresno is very different than Cleveland and Seattle. It's the same routine, but you got to start from zero, right? When I talk to my students about building that repetition, I tell them to get focused, micro. And then, okay, you've got your golf swing, you've got your thing, but okay, you're going to have to, now you're going to pick your market. It starts from zero. You got to just do it. It's faster, but you got to start from zero. I don't think that's the case in multifamily. I
Well,
think,
you still got to know your market, right? It's
okay.
still important to know the market for sure. But yeah, I agree with you. It's not as kind of granular and
Mm-hmm.
local, right? And related to this, I think, is the fact that you know single family homes, right, or anything below 4 units, right? The way that the price is determined is on comps,
Correct.
right? So whatever the guy next door sold his place for is what you're going to get for your place, right?
Mm-hmm.
Assuming it's comp, and you can't control that, right? And you're subject to that. With multifamily, it's based on the income of the property,
Mm-hmm.
right? So it's not based on comps. It's not based on what the last guy sold his for. So there's a lot. It's not so variable, right, as single family homes are as an asset class on the exit, right? So you're paying for a stream of income on a cap rate, and obviously the cap rates move and they're subject to investor sentiment and interest rates and stuff. But it's still, at the end of the day, the value of the multifamily asset comes down to the income that it generates for the investors, not the fact that, like, you know somebody bought the house next door to yours because, like, you know they had to have that house, right?
Mm-hmm.
Because for whatever reason they just absolutely had to have that house. That drives up the price of your house. uh that's not Nobody has to have the multifamily property, right? It's the calculation is this going to produce enough? Can I get it for a price that produces the income I want from the property or not?
Yeah. The other thing I want to definitely give a shout out to multifamily for, and again, you cover this kind of in the multifamily launchpad, is it is far closer to what was advertised to me 20 years ago as mailbox money, right? When I started researching residential real estate, that really was a word that I searched when I was looking for books, right? Mailbox money. And it was pitched residential real estate. And now having owned apartments and houses, generally speaking, maybe the last year not included, right? Last year being an exception,
Yeah.
no doubt. Um, Mailbox money is far closer in apartments, and certainly the bigger, because you get that professional property manager. If you really are that person who's 50 or whatever it is, you want to be traveling the world and not have any phone calls, maybe a couple of emails. It is far easier to do that with multifamily assets than a collection of single family homes, in my opinion.
Absolutely. And it is also far in terms of the exit too. I mean, exiting
Oh yeah.
one 4 unit may be easier than exiting one
Yeah.
100 unit, but exiting one 100 unit is a hell of a lot easier than exiting 25 4 units,
Oh, no
right?
question.
If you
Yes.
try to sell that portfolio, there are very few buyers who want to buy a whole portfolio, and a lot of buyers are going to want to cherry pick it and buy like your 3 or 4 best properties and leave you to deal with the rest of them.
No doubt.
So that is, if you start scale, if you want to scale, right, and you want to minimize your headache involved with scaling, then multifamily is really the way that you have to go, in my view.
Yeah. Totally agree, man. I do have a call coming up. So why don't you hit multifamily launchpad? Because again, I think it really can save and help a lot of people.
Yeah, if you are interested in learning how to invest in multifamily real estate, Michael is the guy for single family homes. But if you want to come and you want to learn about multifamily real estate, Multifamily Launchpad is the place to go. It is the no BS, place to go to just learn what you need to learn with no hype. Not going to oversell you on anything. There's no like higher level coaching programs to join where all the secrets are learned. You get everything right off the bat for a reasonable monthly payment. The thing is, open enrollment ends tomorrow, March 26th. Won't open again until September. So if you want to join, this is it. Tomorrow's the last day. So the way to do it is go to multifamilylaunchpad.org to get the download. That'll put you on the email list. Or if you want to just make sure you get on the email list, just email me at jonathan@multifamilylaunchpad.com, and I will just manually add you to the list, and you'll get all the information.
Very cool, Jonathan. Always fun talking to you. Have a great weekend and a great week. We'll talk next week.
You too, Michael.
Thanks,
See you
buddy.
soon.
Yep.
Take
Bye.
care. Yep.